All right, guys, I got a great value stock for you today. Build-A-Bear Workshop just posted their Q1 earnings report, so I wanted to jump on and break down those fundamentals for you. I'm also going to go over the discounted free cash flow sheet and give you my intrinsic value per share of what I think the stock is worth today. Then I'm also going to go over the chart and give you an idea of where I see the price headed from here. So let's jump right in. What's up, guys? Welcome back to This Just In. Thank you so much for joining me today. We're going to go over Build-A-Bear Workshop today. Everybody loves Build-A-Bear Workshop, guys. This is a stock that I've owned for the last couple of months. I dollar cost average into it every single week. The fundamentals look very, very strong. I am really impressed with what they've been doing fundamentally, and I think that moving forward over the next couple of years, they're going to have a lot of potential upside because I think after our pandemic that we had, the experience-based retail stores are going to do very well. People want to get out of their house. They want to go experience stuff. So today's video, we're going to go over their Q1 earnings report. I'm going to show you what I think about the overall numbers. And then I'm also going to give you my discounted free cash flow sheet so you know what my intrinsic value per share is based off of the cash flow. And then I'm also going to go over the chart, break that down for you, show you where I see the price headed from here. So whether you're trying to trade it in the short term or buy it for the long term, you know what my price target is. Guys, Build-A-Bear, everybody knows Build-A-Bear, right? I mean, unfortunately, when I was a kid, all I could do was window shop because my family wasn't well off enough for us to go in and actually build the bears. But for those of you guys that did, I envy you. It's known all across the world, guys. I mean, it's been in South Park episodes, so I think that the company is going to continue to do well, especially now that everybody's getting back outside. Real quick before we get started, subscribe to the channel if you're new around here and want to see more videos like this. Come over and join us at the Patreon for all of our trade setups. And Day One Squad, I love you. Thank you for your support. But let's jump in, guys. First thing we're going to look at, just real quick, as far as their GAAP EPS, they posted 89 cents, which they did beat. There was a surprise there on the upside based off of analyst estimates. I think about 28% on the upside. When it comes to revenue, also beat by 28%, 117.7 million. Really strong, guys. It was actually one of their best quarters, but we'll take a look at that in a second. When it comes to guidance moving forward, you can see here, guys, in every category, revenue 440 to 460 million compared to 411 in 2021. Pre-tax income 52 to 62 million compared to just 50.7 in 2021. EBITDA 65 to 75 million as compared to 63 million in full year 2021. And then income tax rate in the range of 24 to 25. They're also cutting their capital expenditures down. They're wanting that to be around 10 to 15 million. So very impressive, guys. Let's jump over here. I want to show you some highlights because this is some pretty proud numbers. They should be very pumped on this. They generated 117.7 million in total revenue, guys. That was the highest in the company's history for Q1 ever. So very nice. They're growing. They're also breaking their history records. When it comes to pre-tax income, they did 38% increase, which was about 15.5% of their total revenue. And it was the highest in the company's history as well. So not only highest revenue, highest pre-tax income, and then they also bought back $8.1 million worth of their company shares because they do have that $25 million repurchase program. So it's likely that they will continue to buy more shares. Guys, this company has a insanely low, outstanding share. That's why I like them. I think they're going to continue to buy back shares. It's going to bring that overall, shares outstanding down. Very similar to Big Five Sporting Goods. They've got a really small outstanding shares as well. And I really like to see that. Hopefully they can continue to buy the shares back while the stock is undervalued and they don't wait until the stock rises to higher prices. It could potentially fall down even lower. So we'll just have to see what's going on. But let's jump over, guys. Take a look at the discounted free cash flow sheet. Very impressive. They're currently sitting at about $19.47 right now. You can see their outstanding shares, 15.4. Now, when it comes to revenue growth, I did 10% from now for the next 5 years, and they're actually guiding to do right around there, maybe even a little bit more in some years. So I wanted to just be pretty much what they're already estimating. Then when it comes to because we do discount it 10% and a discounted free cash flow sheet. Then when it comes to cash flow margin, I did 5%. That's pretty much what they're doing today. I'm coming up with an intrinsic value per share of $32.40, which is about 66% upside from the current levels. So guys, do I think the stock is undervalued today? Yes. Do I think it has further upside? Yes. It's actually pretty interesting when you see the $32.40, especially when we jump over and look at the chart. It's pretty historical. So let's jump over and do that. All right, guys. So as you can see here, this stock has been pretty range bound. I mean, really range bound ever since May of 2021. So it's spent about a year in that, total range. If you go from the top to the bottom, just a trading range, Bulkowski type stuff. So you could technically argue, distribution, especially with the lower highs, but we are making higher lows. So as long as it can stay above that 1482 level, I think we're in good shape. The reason why I said that $32 level was very interesting, because take a look, guys, historically. We go to the weekly chart, look at the IPO price, $23.30, but look at the highs, guys. Look at that inflection zone, $30.88, $31.99. So we get back above that IPO price. In reality, if we can stay above $20.87, like you get above it, you back test it successfully, I think we could see $30.88 rather quickly. You can see the historical price action in that area. We've just never been able to get back above that $20.87 level and actually successfully back test it. If we can do that, I think we're in good shape. Unfortunately, though, guys, it is hard to buy the stock up here at this level because you can see what happens. You're in the trading range, and if you get rejected up here, again, lower high, you absolutely could run into a distribution phase and you could run down to much lower prices. So this is a tricky area here. You had the bearish butterfly, you had first high, second high, and then you sold off. But again, you broke the 200-day moving average, you gapped back above it, so it's like that spring. If you could break this supply line, guys, and run up and break that 2087, which is also a historical level from history, you can see, initial lows, back tested it here as resistance. When it did that in 2007, it didn't get back above that level until 2015, and it never really meaningfully got above it and then back tested it. So very critical stuff here, guys. I think if we can stay above this level down here, $14.82 to $15.50, we're in good shape. But as soon as you break that, you're in bad shape. You're in really bad shape. If we use a trend channel, guys, and we go from the, we just use the channel, and then we use the measured move of the channel. This is pretty interesting. It pretty much takes us to the top of the zone. So the measured move, if it breaks out, could potentially take us to $32, but you have to break out. If you break out to the downside, you're headed back to the initial highs from February of 2020, right before the COVID crash. So you got to be careful, guys. I really like it fundamentally. I think if you're buying it for the long term, you'll do just fine, especially if they continue to buy back shares. If they continue to post good numbers, I think the stock will do just well. You can see here on the daily, we've rejected the bearish control zone every single time we've tested it. We're back above neutral, headed to the bearish or bullish control zone, which we've also rejected. So I think if we can continue in the right direction, we get back above 60, I think that'll send the stock price over that $20.87 level. And once you do that, I think, you get back above 23 bucks. I'll see you at $30.88. That would be historical, guys. That would get us where we needed to be. You can see that's where we need to be. Once we get up there, I think we're in good shape. So let me know what you think down in the comments. If you agree with me, I would love to know what your price target is. And this video is for entertainment purposes only. I'm not a licensed stockbroker. Always do your own research and due diligence. Don't just take my word for it. And I'll see you guys in the next one. Peace.
you.